Okay. Once again, Damon Watkins with Cal Poly CIE. Welcome to QuickBooks One-on-One. This is one of actually 6 different classes that I host in regards to QuickBooks. Today's class is really a very beginner's class to get you set up in QuickBooks running. I do an intermediate course as well that I repeat twice a year. And then I do an advanced QuickBooks. And then lastly, but not leastly, at the end of the year, I do a tax reporting session. So the idea behind all these sessions is they build upon the last one to give you the knowledge base to be able to run and operate your business successfully utilizing QuickBooks. Before I get started, I would like to just spend a moment talking about the SBDC and the services that it provides to our local community. The SBDC is a key cog in the SLO and Arroyo Grande and Paso area in ensuring and helping small businesses develop and grow to become successful. They are funded by a number of different grants that provide services free of charge to any business owner. And the only requirement that is needed is for you to sign up for those services. Most people don't realize that these services are free and readily available to you and supported by grants that enable your business to grow and become successful. If you're not an SBDC client at this point in time, I would highly recommend that you consider signing up for some of these services to help you in the areas that you might need assistance. With that said, let's jump right into QuickBooks, and I'll walk you through basically what the procedure is today. And there will be some time at the end for any Q&A that comes up regarding specifically what we will be talking about. With this particular session that I go through, I do like to make it as interactive as possible. My assumption in these situations, as I walk you through the 101 scenario, is that you have 0 experience working with QuickBooks. You have not installed it on your system as of yet. And the words chart of account really don't register with you. That's okay. That's part of what this session is about, is getting you comfortable with all of these areas so that we can move forward with running your business and, more importantly, tracking the financial aspect of what takes place within QuickBooks. This session normally takes about 60 to 90 minutes, depending on the Q&A that come up and or any specific areas that we may go into. The one request I do have as we proceed through this is that there aren't any specific tax-related questions that we get into. The reason I pose this now is that they can be very specific to the type of business that you're dealing with, and so I choose to take those offline in regards to the specifics of that particular agenda that you might have regarding taxes. With that said, once the session is done, I will be sending out a summary and a guide going over everything that is discussed today. The good news in this regard is you don't need to take any notes. So hands-free, focusing on exactly what is taking place in the slide deck, and then interacting as much as possible so that I can answer your questions and point you in the right direction. A little bit of history about myself. I've been working with QuickBooks and teaching it for about 25 years now in every size and scale business. A story I'd like to share right at the beginning before I even jump in is the scalability of QuickBooks. Before I worked for Cal Poly, I actually worked for a solar company called REC Solar, which is locally based in SLO. We had over 800 employees, had a $250 million budget that I was able to run out of QuickBooks for 2 years before we migrated to a new system. The point I'm trying to make with this story is basically that QuickBooks is completely scalable towards whatever your needs are. The key aspects of making QuickBooks successful is both the setup procedure and then the routines that you create to follow up on all necessary work that takes place. One of the things you will quickly discover is it's garbage in and garbage out as it relates to QuickBooks. So having clear, defined processes that are repeatable and, most importantly, scalable in regards to the business that you're in is key, and we will spend some time talking about that today. With that said, if there's at any point any of the agenda that I'm going over or the subject matter that I'm going over that you have any questions about, please don't hesitate to raise your hand, stop me, and let's answer the question at that point in time. With that said, let's get started on QuickBooks 101. Just share my screen. Okay. Again, there's no need to take any notes in regards to today. I will be sending out this user guide once I'm done with this session today. It will actually highlight everything that I've gone over today and has all the additional information relating to the additional classes that I teach. So while you might not be at that point in time where you would be looking to do it, you certainly can read up and get the knowledge base. And if you choose to, sign up for our next classes as they follow. Again, today's assumption is basically that you've never seen QuickBooks before, you've never worked in it, you haven't even installed it on your system. And so understand at the beginning, I'm just going to walk through these processes pretty simple to get everyone up and running. Long story short, when it comes to QuickBooks, most people are familiar with utilizing QuickBooks Online. That's the way that QuickBooks is pushing right now. I'm actually, my area of expertise actually over the last 25 years is more on the desktop side. It's taken me a while to get more familiar and more accustomed with the online version. I will tell you that if you're a robust company looking for reporting and detailed breakdowns, that the desktop version is superior to the online version. That does come up quite a bit in these classes when I'm talking about it. I like to put it right up front right now. The good news is you can migrate between the online version and the desktop version. The desktop version has significantly more customizable features than the online version does. In many ways, the online version is just a slimmed down version of the QuickBooks desktop. But again, it all depends on what your needs are. Again, if I can be of any assistance in regards to deciding which is the best version for you, don't hesitate to reach out. So getting started today. Key areas that we will be looking at is installing QuickBooks, which is a matter of logging on to intuit.com, downloading the application file, and getting started. But let's talk about some key things that we need to get done before we take that first step from a business perspective. Understand that if we're going to truly utilize QuickBooks effectively from a business reporting perspective, we need to ensure that there's some due diligence that has taken place before we do the setup. So things like making sure your business is registered with the city that you're in. If you're incorporated, making sure that you're registered with the Secretary of State. And most importantly, and not leastly, is making sure that you are registered with the BOE, the Board of Equalization, so that we can pay our taxes. Again, these are key areas that you want to make sure are set up correctly. Ignorance is never an excuse when it comes to reporting, especially as it relates to taxes. And if you are accruing in any way within your system, you need to be reporting. Again, we won't go too far in that today, but if you do have any further questions, I certainly can answer them at the end of this session, or we can set up an individual meeting to go over the needs. Some of the key areas that we will touch on today. Number one will be the chart of accounts. How do we go about setting QuickBooks up so that we can track our finances effectively, and more importantly, have a clear understanding where our cash flow is? Nothing will shut a business down faster these days than not having a clear understanding of our cash flow scenario. It's the biggest hurdle that small businesses have to overcome in the first 24 months of existence. And so having a clear understanding of what bills are due and what bills are going out, and most importantly, what you are collecting on, is going to enable you to run a successful business. And understanding that relationship between the two from a cash flow perspective is vital. This also enables you to start building credit for your business. Once you get credit for your business, you get better terms for your business. Once you have better terms for your business, you can manage your cash flow better. I'm going to pause here because that might not make sense to everyone. So let me explain exactly what I'm talking about. While QuickBooks is used to track your expenses from a financial aspect, the cash flow that you deal with every day in regards to the sales or the services that you provide people are key. As an example, if you were to go buy something for your company right now from a vendor as an entity, they would probably expect you to pay at that moment in time for the item or the service that you're asking for. But as your company builds credit, and I'm not talking the credit as in the form of a credit card, but actual credit against the company, has its own identity, its own tax ID, you're able to get terms. So an example at hand is I bought a table for my business today, I have to pay for it today, and I'm out that cash. Well, if my business was established as an entity and I had started to build credit, I would buy that table today and the terms would be net 60. Well, I have 60 days to pay that table off. While that may seem small, that's 60 days that you have that cash on hand that you can utilize before it needs to go out the door. How do we go about building credit for our business? Very simple. We go down to the bank and we open a secured credit card in our business name and we start using it to track our expenses. This will actually tie back to the section within banking that I will spend some time going over, showing you how to accurately track the expenses associated with your business. One of the biggest hurdles that small businesses need to overcome is to capture all of the expenses associated with their general operations on a daily basis. This is an offset to the revenue at the end of the year when you do your tax filing. And it's also the biggest area of mistakes that are made within small businesses, not capturing all of those expenses. And this relates to expenses associated with travel, with lunches, with buying furniture or supplies for the office, and ensuring that each one of those transactions is captured and categorized correctly in QuickBooks. So at the end of the year, when we are doing the filings, you are not paying as much in taxes. This is something that is lost on people when they first start off because they're so focused on the growth side of their business that they don't always take this into account. So with that said, a couple of other things we will take a brief look at. We will take a brief look at creating invoices. We will also take a look at receiving payments through the bank system. We'll also show you how to set up the link between the bank and QuickBooks so that any transactions will automatically post in there. We'll show you how to enter bills, set up vendors, and most importantly, set up customers and how to invoice them. That will pretty much take up most of our time today in amongst any questions that arise. If there's anything else that you would like me to talk about today or a particular subject matter that you'd like me to address, just please raise your hand within the chat or mention it to Madison and we can take a look. With that said, let's get started on QuickBooks Online. Now, as I've stated before, QuickBooks Online is a little different from QuickBooks Desktop. If you've had any prior experience working with QuickBooks in the past, you'll notice that straight away the look and the feel of QuickBooks is slightly different than the desktop version. With that said, once you have installed the file and installed QuickBooks Online, you can load it directly through your browser. It is accessible via your phone and the phone app, and you can do a number of key features directly out of both the phone app and the online app. These include receiving payments, sending invoices out to customers, and providing them quotes. Again, all of these are tied to the fact that QuickBooks needs to be set up correctly for us to facilitate that. Now, if you use QuickBooks in the past and are looking to import any existing information, there is an import feature that is pulled up right at the beginning of the setup phase. Again, if you have no prior history and you're just looking to do a clean install, then that is the way to proceed. Let's take a look at the QuickBooks homepage. Okay, so we've got QuickBooks installed. We've gone ahead and registered our QuickBooks, and it brings us to the homepage. Now, the homepage is basically the navigation page that will enable you to go into any area within QuickBooks, whether it's customers, banking, vendors, cash flow, and/or reporting. You're going to get very familiar with this page as it will be the landing spot every time you log into QuickBooks. The nice part about this page is it's fully customizable towards your needs. I would actually highly recommend spending some time just getting more familiar with the page and what shortcuts you may need to access your business in regards to this homepage. Again, as you will find over using it over time, you will build out the customization to meet your needs. This can be very helpful when things get busy and you need to navigate between multiple points in time, multiple points within QuickBooks. Anything referenced on the home page as a whole can be accessed and navigated on the left-hand sidebar as well. And this relates to all the different areas within QuickBooks. You can also customize and edit the preferences on the desktop through the company file and settings. Pretty straightforward. I will actually touch on this briefly as I go back and talk about some of the other interaction relating to some of the other modules within QuickBooks. The one thing I did and want to highlight right now, as this does come up in the discussions quite often, is that within QuickBooks Online, the payroll module is an additional cost to add on. So while QuickBooks Online does handle payroll, there is an additional cost associated with adding the payroll module onto this. That is why I actually do not touch on it too much today, and we'll spend some time going over that in my intermediate class. With that said, if anyone has any questions relating to it, I'm more than willing to answer, but I do like to put that out there at this point in time. Okay, so let's talk about using the centers and what it really means. Again, everything I'm reading today and going over with you, I will be sending out later. So again, just a friendly reminder, you do not need to take any notes. So QuickBooks tracks the people and companies that you do business with in the centers. There is a separate QuickBooks center for customers, vendors, and employees. Use the centers to manage and view all information and transactions associated with the customer, vendors, and employees. All of the centers work the same way. We'll use the customer center to show you how they work. So as you're looking at this right now, this is the customer information page. So this would be the setup associated with all of your customers set up within QuickBooks that you would either be looking to invoice or collect a payment from. Now, the nice aspect about the way that this is set up is once the customer, is set up in QuickBooks with all the relevant information, the system is able to email the invoice directly to the customer, and in turn, you are able to receive an electronic payment right away. This is highly convenient from a cash flow perspective, as you don't have to wait for the proverbial check in the mail, or conversely speaking, wait for the net terms to post. Your customer has the ability to pay that invoice directly there once they click on it and process the payment the same day. Again, another plus from a cash flow perspective as you manage your business moving forward. Key areas that we want to pay attention to here, okay, is making sure that we have the relevant information for the customer set up correctly. So not only the customer's name and contact information, but street address as well. One of the areas that's really important here to make sure is that all relevant information regarding the business and that contact is kept up to date as much as possible. Remember, these invoices are going out to either specific email addresses or specific individuals. A lot of the time people leave companies and they transition on to new positions. And if you don't have more than one contact information, more than one contact from an AP, an accounts payable perspective, your invoices might not be making it to the right person. Please keep that in mind as you are setting up these customers within your system. Lastly, but not leastly, do take the time to build out the invoice templates. One of the nice things about QuickBooks is you do have the ability to customize the invoice templates that go out to your customer. This means that you can add things like your logo, your contact information, and any other information relevant to the customer that you would like to provide at this point in time. This is also an excellent way for you to communicate with your customers as you interact with them through the invoicing and emailing process. The key aspects of this that are really important to highlight is that contact information. Here's the thing about a customer receiving an invoice. If they understand the invoice and they're happy with it, they're going to pay it. But if they have a question in regards to that invoice, they are not going to pay it. And the best way to get a customer to pay that invoice is to make yourself accessible to answer any questions that they may have. So in turn, they feel comfortable paying the invoices. And this is done in two ways, either a contact email address that is provided to the customer so they can pose questions, or contact telephone numbers so they can follow up with a phone call. Again, these are key from a cash flow perspective because a customer will not pay on an invoice that they have questions on. So take the time to make sure that the relevant information is within the template and that you feel comfortable sending that out to your customers. If there are no questions in regards to this slide, I'm just going to move on. Using forms, one of my favorites. All of your everyday QuickBooks tasks like invoicing, paying bills, and writing checks are done on forms. You can reach every form in QuickBooks from the home page or the menus. We'll use an invoice to show you how forms work. Now, the nice part about this is much like I explained in regards to the invoice templates, we can customize these forms to the needs of your business. And that includes the name, your logo, and any additional contact information that you choose to reference within there. Now, the nice part about the forms is it is a simple process of walking you through the templates. There are a number of them already provided in the system that you can simply customize to your needs. Again, I would take some time to get familiar with some of these templates as you will using them quite a bit as it relates to your customers. There's everything from the estimate template that can be converted directly over to an invoice to any other forms that you might be looking for. Do keep in mind that these forms are very specific to the business and the entity that you are. and so that you will be customizing them towards your needs. I don't spend too much time going over the forms as they are very specific to the business itself, and a lot of the time customers like to have them customized towards their business perspective. And so whether your business is in construction, in accounting, finances, that's how that template will be set up. Getting paid. Probably the most important part about running a business these days is making sure that we get paid. No money coming in the door means no money going out the door, which is the lifeblood of any small business. So ensuring that you are getting paid in a timely manner is key. I actually like to stop here for a moment and talk about how important this aspect of QuickBooks is. One of the biggest hurdles that you have to overcome as a small business is what I touched on right at the beginning, is cash flow. So let's talk about cash flow real quick and what it means to you, and more specifically, how do we use QuickBooks to ensure that we can track and, more importantly, have a clear understanding of what our cash flow scenario is. So let's think about a product that we buy. Let's be anything really out there that we're buying that in turn then we're selling to a customer. The thing about terms, just like we talked about in regards to cash flow when it comes to dealing with vendors, it's the same scenario with customers, right? And so as you work with customers and customers ask you for terms, and just so we're clear, terms are the period of time that the customer has to wait before they are obligated to pay you. In most cases, we're talking about net 30 terms. So the business incurs the cost, we send an invoice out, we give the customer net 30 terms, and basically the business is out that cash for 30 days. Well, business doesn't stop just because that customer hasn't paid you. You're still moving forward on purchasing things for your businesses and invoicing your client. And so as you spend money and as you receive money, that is the cash flow scenario that we're talking about. And that's why credit relating to your business is so important. And again, I'm not talking credit in the form of a credit card. I'm talking credit in the form of the ability to pay that debt. And just so we're clear, that's what credit actually means. It doesn't mean how much debt you have. It's actually the ability to pay debt back. And why that is so key in this scenario is that as you're invoicing customers out and waiting for those funds to come in, you are still expending cash at the same time. And so having a clear understanding of what AP looks like, i.e. accounts payable, the bills that you need to pay to keep your door open, whether it be lights, internet, electricity, so on and so forth. And AR, accounts receivable, which is customers who will pay you, there's a direct relationship between the two that has to be clearly understood. So as an example, from my side of the world, when I worked at a really large company, and I still do this today, but when I was at REC Solar, every Monday, the very first thing I would do when I would walk into the office is run an AP report, meaning an accounts payable, what I had to pay out that week, let's say $25,000, and AR, accounts receivable, what cash I expected to receive it. And so I would go in on Monday morning, I'd run a report and I'd see, oh, I'm going to get 15,000 in this week. And I'd go to AP and I'd look at it and I've got 25,000 that I need to pay. Well, we got a problem here. I got 15 coming in and I got 25 going out. If we repeat the scenario for a couple of weeks, the company's going to be in trouble. And so deciding which bills to pay, what's the timeline associated with them is the exact scenario that we talk about when it comes to managing cash flow. And that's why those terms that we talked about right at the beginning of this exercise are so key. Because just like your customer might have negotiated terms of net 15, net 30 with you, as you build your business credit, you're able to get better terms with your vendors. So your vendors will initially start off by giving you net 0, maybe net 10 terms. But as you continue to do business with them and be a good customer to them, they'll start to give you terms that will enable you to push those payments out. Once you get to a point where the terms for your vendors are further out than your terms for your customer, it enables you to manage that cash flow scenario a little better. One of the bridges that can be used to help you in those scenarios is the credit that we talked about. So again, really having a clear understanding of what that relationship looks like. And when I talk about cash flow, I'm really talking about what's coming in the door and what's going out the door, and how QuickBooks can help you track and manage that moving forward. I'm not going to spend too much time talking about the sales receipt. Most people don't even use it these days, and I'm going to actually spend a bit of time later on showing you how to utilize the banking system to actually complete this very same task. I do want to just show that it is readily available. The most common place I see this being used is at wineries when they receive in their shipments to the inventory system. QuickBooks Online does have a robust inventory system that can be set up to track against inventory line items. Again, I tend to go over that in a little bit more detail in my intermediate class as I tie it back into things like purchase orders and requisition orders as well. Creating an invoice. Hey, probably the most key detail part in sending out a bill to the customer to get paid is this invoice template. And ensuring that everything is set up accurately and correctly in here is going to be key. I will actually be going into QuickBooks in a little bit to show you some of what this looks like in the real world, but I do want to just talk through it a little bit to make sure that everyone feels comfortable with what these actual invoice templates look like. Now, the nice thing about QuickBooks Online is it will actually walk you through the process of setting up these invoices. It's very, very user-friendly from that perspective. The downside is it's not as customizable as the desktop version, but they've done a really good job of ensuring all the key areas that need to be in here are. So again, spending some time setting up your customers and vendors within QuickBooks is actually the very first step when I sit down with individuals and go through this process of setting up QuickBooks. Those two items in the chart of accounts are traditionally the first three things that I touch on as it relates to setting up QuickBooks correctly. Once you have your customers and your vendors set up correctly within QuickBooks, you're able to pay bills and, most importantly, invoice your customers and receive payments in. The key areas to look at when we're inside the invoice template is selecting the correct customer, telling QuickBooks exactly what we are selling or the service that we are providing, the rate that's associated with it, and then the total cost. Now, one of the nice features about QuickBooks when it comes to the services and the products being provided is we can actually set them up manually and tag a specific line item against them to track within the chart of accounts. What does that mean? Well, one of the things that we want to establish within the invoicing system as well is not just what we're selling the customer and what we're selling it to the customer at, but we want to be able to ask QuickBooks, what's the margins on those line items that we are selling to the customer? And where is the area that we are most profitable in that area? So as an example, when we're dealing with, let's say, a construction company or a company that handles materials on hand with a markup on it, we can actually set the system up to specifically gear towards those specific line items. So if I'm charging someone for a piece of sheetrock, let's say, and it has a markup of, let's say, 10%, then the system is able to calculate out what the margins and, more importantly, what our profit margin is on those specific line items. Why this is so important is once we start getting into the reporting side of QuickBooks, we are able to see very quickly and easily what services and or products are most profitable for our business, and more importantly, which ones have the biggest impact on our business as a whole. But it does take the time and effort to set these up correctly within QuickBooks. Now, all of these items can be set up through the chart of accounts specifically. And what's nice about it is we can specifically put the percentage of margin that we're looking for in there, and the system will automatically calculate it out for you. Once that is done and you have all those items and or services set up in QuickBooks, it's simply a matter of entering either the quantity and or the price associated with that particular low line item. The system will then automatically calculate out the total. If there's any taxes associated with that specific line, it will accrue at the bottom of the screen and be tracked against the tax reporting system within QuickBooks, which is actually very robust. I will pause for a moment just to see if anyone has any questions regarding the invoice. Just a heads up, I will actually physically be jumping into QuickBooks a little later and showing you this within QuickBooks, but I like to do a brief overview just to give everyone a clear understanding. Okay. Customer payments. Okay. We sent the invoice out to the customer. Now the customer is actually paying us. I like to go through a couple of different scenarios here because the banking system is one of the key features within QuickBooks that really, really have done a great job of making it as easy as possible to not only track your expenses, but to tag them to the correct chart of accounts code so that we can track that expense at its specific level. So as it relates to receiving payments from customers, my highest recommendation there is that you link your current business bank account up to QuickBooks. The nice part about the banking feature within QuickBooks is once your business bank account is synced up with QuickBooks, any expenses and or payments that hit the account automatically post the next day within the banking system. It's simply a matter of you going into QuickBooks and tagging the specific payment in the banking feed towards the invoice. And the system will actually attempt to do that automatically for you and then simply ask you to confirm. What do I mean by that? QuickBooks has the ability to recognize payments by vendors' names. And once you make an association, it will actually automatically make that association for you the next time that payment is received. So Joe Smo pays me yesterday. The payment hit the bank account. I come in this morning. I see that Joe Smo's $500 invoice has been paid. The system has already told me that it knows it's for Joe Smo and it sees that there's an open invoice for that amount. Would I like to tag to it? And we simply confirm that. Now, this is the same methodology that's used in the chart that you're looking at right now. The only difference between it is in this case, it was actually a physical check that was received. You can tell this is a rather old slide as those are few and far between these days, but QuickBooks does have the ability to receive desktop checks deposits that can then be posted directly at the bank. Again, a really, really great feature within QuickBooks is the banking feed side of things. It does make life a lot easier. The key aspect of this is that this exercise has to be done at least once a week to ensure that you're staying on top of the coding that's associated. The reason this is so important is one of the key aspects that you want to get familiar with is the reconciliation that takes place at the end of the month. One of the things that we always want to establish is one source of truth as it relates to the financial aspect within QuickBooks and what that balance should be. Your QuickBooks balance should always tie back to your bank balance, and they should always align. If they don't, it means that something is more than likely off in QuickBooks or has been posted incorrectly. One of the key areas that I focus on in our first sessions when we do a one-on-one is what it takes to do the reconciliation within QuickBooks and how important it is. Invariably, mistakes are made, and a lot of the time within QuickBooks, it actually tends to be a fat finger scenario. When you consider the sheer amount of entries that you're putting in, there's always going to be a scenario where the possibility of a mistake takes place. I can't tell you how many hours I've personally spent trying to track down 3 cents on a missing invoice, only to discover that it was a simple fat finger scenario where someone had inputted the correct amount. But the only way to validate the balance within your QuickBooks account and the balance at your bank is to do that reconciliation. While we're talking about it, because it's a very big, intimidating word, and a lot of the time when I go into this dealing with customers, they get very intimidated. So let me explain what it actually means to reconciliate QuickBooks against your bank account. The reconciliation feature within QuickBooks is really, really simple. All you have to do is get your bank statement. The system will ask you for the beginning balance at your bank account and the ending balance in your bank account for that month. It will then calculate out all the line items that you have tagged within QuickBooks and will tell you if there is a differential between what's in QuickBooks and what's at the bank. And if there is, then you know that you need to go back and they're either missing an entry or something has not been updated at the bank. That way, every month you start QuickBooks knowing that you tie directly back to your bank account and that you're in balance. Can't tell you how many times I have customers come to me at the end of the year saying, we've been doing our finances, we've been doing everything, but we have not been reconciling, and we went to close out the year and we have a $19,000 discrepancy and we have no idea how to tackle it. Well, if they had been reconciling their books every month, they would never have run into that scenario. It's a lot easier to manage a $500 differential on a monthly basis than it is to deal with a $19,000 deficit over a 12-month basis. It's these little tasks that we can put in place from a process standpoint that enable you to run an effective and streamlined business. Also, to have a clear understanding of where your cash is and where your cash is going. This enables you to grow a successful business with those clear understandings in place. Making deposits, probably one of the easiest parts of what QuickBooks does is receiving of payments. Now, if you're directly linked up with your bank account and those payments are being processed directly through your bank account, there's actually very little that you have to do here. The system will automatically pull those deposits over for you, and they will be available to you within your bank feed when you come into the office the next day. You simply have to do the instructions I gave you on the previous slide, whereby you're simply tagging that payment to that specific invoice. The nice part about this, again, as I stated earlier, is that the system does have the ability to learn. And once it recognizes the customer and the payment amount, it will actually match them for you automatically and then simply ask you to confirm. QuickBooks also has the ability to receive checks, just like we talked about before, where you're able to do desktop deposits, mark those checks, code them against the invoice, and thus will wash that specific invoice out of the system. One thing that I like to highlight in regards to the depositing of checks, as it can be a little bit cumbersome when it comes to the reconciliation, and let me explain why. If you're receiving checks on a daily basis as it relates to your business and then depositing them daily, it can make that reconciliation pretty difficult. And so my recommendation in this area is if you are receiving checks, to only do the bank deposit once a week. Well, what do I mean by that? What I mean by that is you can actually receive the checks in, post the checks against the invoices, wash them out within the banking system, but not complete the bank deposit until Friday. And the reason that I recommend this for ease of use is that from Monday through Thursday, you're simply receiving the checks in and posting them against the invoice, and then on Friday, making a total deposit to the bank. Why this is nice? When you go to do that reconsolidation, you really only have to look at 4 deposits to make up that total on the bank statement. That would be the 4 Fridays that you did those deposits, as opposed to possibly having 20 or 25 different deposits that you are then going to have to tie back to. Again, this is all dictated by cash flow. Again, do I need that money in the bank right away? Or can I manage to wait until Friday to make the deposit, which in turn will make my life a lot easier when I'm looking to reconcile the books within QuickBooks. Again, the process of actually making the deposits is very simple. You can actually set up multiple bank accounts to be deposited to if necessary. Again, take the time to go through the slide to get familiar with what I am talking about in regards to the different bank accounts, which can be referenced on the top left-hand corner of the screen. So you can clarify on what you mean work with Spotify and Big Commerce. Because QuickBooks does have an open API that pretty much works with pretty much everything out there. So when we're talking about Spotify and Big Commerce, are we talking about integration? Are we talking about a feed? If you could, Carlene, give me a little bit more detail in that regard, I can certainly attempt to answer that question for you. Okay, take a look. Can the information post automatically into QuickBooks? Sorry, I'm new. Just want to make sure I don't have to post every transaction. No, you can link these up. It all depends on the API that you're using, first of all, and or the vendor. So it really depends on Spotify and Big Commerce in regards to
Shopify? She wrote Spotify, but does she mean Shopify?
That's what I might be Shopify.
Oh, okay.
And Carlene, if you could clarify, because I do know Shopify does have a direct integration with QuickBooks itself. So much like I explained with the banking, that's Shopify. Yeah, totally. Good catch, Madison. Yes, in fact, I actually know for a fact that Shopify does, and it acts in the same manner that I just talked about with the bank. And so does a number of the processing systems, from Venmo to a number of them out there do have direct integration. So let's stop for a moment. Well, what does direct integration mean? Well, much like Carlene said, you don't have to enter every single transaction associated. The system will actually pull that information over, and you simply need to tag it towards either the invoice or the receipt that you want it to from a tracking perspective. Trust me when I tell you, this is a huge time saver. Being someone that was in the world before this was available, where every entry had to be done manually, this is a huge time saver. I can personally tell you that in dealing with this particular scenario, it was one individual we had that solely worked on this. And because of QuickBooks Online's ability to automatically match these up, that position was kind of muted based on this alone. So when I tell you that it significantly improves your timeline associated with actually tracking and tagging them, it does a wonderful job. Now, the key part here is not every business has an open API with QuickBooks. I would say that the large percentage of the ones that you deal with on a high level do. With that said, QuickBooks does have the ability to write custom APIs for specific business should you need them to. They're not that expensive, and there are a number of developers out there that you can work with to meet your needs. It just depends on the structure of the business and what you're looking to achieve at that time. Hopefully that answers your question. Okay, let's talk about paying others. So we figured out how to invoice our customers. We figured out how to get paid rather quickly, which is great. But now the other side of things is that AP side, the accounts payable, the bills you need to pay to your vendors. And let's talk about why paying our vendors in a timely manner is so important. So you've heard me talk about building business credit, right? And again, I want to highlight, we're not talking a credit card. We're talking credit for the business, just like you have personal credit yourself. Your business has the ability to build that personal credit too. And your vendors actually track against your payments and the timeline that you pay on as well, just like when you do with your personal credit or your FICO score per se. Your business actually has one too that's reported on. And these vendors track the ability of your business to pay your bills on a timely manner. And this is really, really important when it comes to establishing the credit for your business, and more importantly, getting better terms with your vendors, because your vendors will actually run your credit history to see what that looks like, and that will dictate to them what terms they give you. So making sure that you are paying your vendors on in a timely manner, and or communicating with them if you are not, is going to be key so that you don't get reported on for late payments. With that said, once the bill is entered into QuickBooks, the system will actually automatically prompt you when a bill is due. And this is why I highly recommend that everyone run their AP every Monday morning to see what bills are due that week, just like you would run your AR, your accounts receivable, to know what funds are coming in the door. Now, the good news about the AP side is once you've tagged those invoices that need to be paid, you can simply process the payment directly out of your bank account, and your vendors are paid just as fast as you are paid. This is a great feature within QuickBooks, and trust me when I tell you, your vendors greatly appreciate it, just like you greatly appreciate your customers paying in a timely manner as well. This can also be accessed directly from the homepage that I referenced in the beginning, and can be customized to actually show what invoices are due for that week automatically. This is a great feature that I like to utilize within QuickBooks. Lastly, but not leastly, the reporting manager actually has the ability to build out a customized report for you that can be emailed to you weekly, monthly, annually, whatever suits you best. So you can actually go into the reporting manager within QuickBooks, Ask it to generate that report for you on a weekly basis and have it automatically emailed for you. So instead of having to go in and run that report on a Monday morning, you can actually set the system up to automatically email you both of those reports so that they're ready and waiting for you within your inbox before you sit down and have to get into the process of deciding what bills you're going to pay this week and what bills you're going to try and collect on from this week. Understanding that at its core, this is what your business does come down to from a financial aspect, is the ability to pay your bills and collect from the customers that you have built in turn. I am literally going to spend about 30 seconds on this slide because I will tell you probably in the last year, I've come across one company that still writes checks. With that said, QuickBooks still does have the ability to write checks if necessary and or print them out. It's a very simple process. Once AP is set up, simply you let the system know what the beginning check number is, what the bank account that is coming out of, and the system literally will do the rest for you. Again, I have literally only come across one company in the last year that still writes and prints checks. So unless anyone has any specific questions relating to the ability to write checks out of QuickBooks, I am not going to spend that much time here. Most payments these days are done by EFT directly out of your bank account, which is actually a better method to use because the system is able to capture that expense and track it directly for you. You're also able to tie those out directly to your bank account when we go ahead and reconcile at the end of the month. I use checks. Can I add a company name and mailing address at the top of the check? If that's what you're asking me, then that needs to be printed by the bank that is producing the check. That cannot be done within QuickBooks. You cannot modify a check in any other way. Otherwise, it affects the ability and the watermark on that check, and it won't be receivable by the bank. But you can customize them. Depending on who you bank with, you absolutely can add your company name, your logo, etc. onto them. Yep, you most certainly can. And that's all done through whoever you bank with. Did that answer your question? Let me know if you have any more in that regard. Bills. Well, we invoiced our customers. Now we got to pay our bills. Bills are probably the most straightforward aspect of QuickBooks. Just like we talked about setting your customers up within QuickBooks, I highly recommend that you actually do set up your vendors within QuickBooks as well. Not everybody does. The reason that it's really beneficial for you to set up the vendors within QuickBooks is that at the end of the year, when it comes to budget season, and oh yes, QuickBooks does have the ability to track against the budget, which I will talk about a little bit. One of the key areas is you want to understand where money is being spent and what it's being spent on. Supplies of material, utilities, overhead, etc. And being able to track at that line item, which we will get to when we start to take a look at the chart of accounts, is key to the success of your business. And one of the things that you can utilize these entries against the vendors is at the end of the year to produce some reporting that is actually showing you exactly what you're spending where so that you can build out a budget and in turn track yourself against a budget. One of the most successful ways to ensure that your company is staying on track to success is to have a budget and to track against that specific budget and hold yourself to it. It's very, very easy to get out of whack and start spending monies in areas that you don't necessarily have to because you don't have a budget in place. I like to reference a budget being much like a business plan. It's a roadmap to success, kind of like the bumpers at a bowling alley. It keeps us on that straight and narrow path to success. Well, in many ways, entering the bills and tracking them correctly, it falls along those same lines. Understanding where your funds are going and what they're being spent on is key to understanding that relationship moving forward. Other than that, the bill process is very similar to the invoicing process for the customer. Once it's entered into the system and marked with a due date, the system will prompt you when that invoice is due for that week. And it's simply a matter of processing out that EFT payment directly. Again, this is that direct relationship between AP, accounts payable, and accounts receivable, and what that relationship looks like. Okay, so just touching on paying the bills. On the previous page, we're actually just looking at paying one bill. And on this page, we're actually looking at paying multiple bills. So once the system prompts you to pay your actual bills, it will actually bring up a list of the bills that are due for that period of time. And you can specify a week, you can specify a month, you can specify a day. It will list out all the invoices in chronological order of when they're due. It's simply a matter of you tagging, as you can see on the left-hand side, the specific invoices that you are looking to pay. The system will give you a rolling balance at the bottom of the page there on the right-hand side, and then the ending balance at your bank account in the lower right-hand corner. Key areas to pay attention to on this page are the date, the accounting method the method being used, i.e. in this case, check, and the account that is being drawn directly from, in this case, the 10100 checking account. Once all these items are lined up correctly, it's simply a matter of clicking on Pay Selected Bills, and the system will automatically process those payments out electronically for you at midnight. Page Insights. So we actually talked about this really briefly on the home page. So one of the features within the home page that you are able to do is the Insight tab. Now, the nice thing about the Insight tab is it talks a lot, or provides you, I should say, with a lot of information in regards to exactly what we just talked about. From this page, you can see invoices that are due, bills that have to be paid, what the cash flow will look like, and what your profit and loss will look like over a set period of time. The key areas around this is you can customize this over what duration you're looking for, whether it be a quarter, a month, a week. And more importantly, you can customize any of the specific reporting icons that you see on my screen currently. There's actually numerous of them that you can track against, whether it be cash flow, whether it be relating to a specific customer or a specific project and or event. The key area that I like to focus on in this particular page is the AR and AP. It's able to give me a high-level overview of what I am receiving and what I am expected to pay out, which helps me in turn manage my cash flow scenario. Taking the time to get more familiar with the home page that we talked about at the beginning of this class, and this page is going to be key to your success. One of the things that's really great about the Insight page is it provides you a ton of information in a clear snapshot. You don't have to spend time digging into it. With that said, you do have the ability to directly dig into these specific transactions simply by clicking on the icon. It will take you directly into the reporting features within QuickBooks and give you that necessary detail that you might be looking for. I can't say enough how much it benefits you to take your time and get the Insight page set up correctly. There is also additional reporting that can be set up within QuickBooks in the Insight to provide to your customers. So this is where if you start to struggle with things like collection in regards to your customers, if you have specific customers that are not paying you on time, simple little exercises like sending out a statement monthly to the customers that are behind to remind them that their invoices are due. The other way to motivate customers to pay you in a more timely manner is to add a line item at the bottom of the invoice where you will be charging them, and I'm just using this as an example, 10% interest on late payments, 1.5% on late payments. These are great motivators to get your customers to pay you in a timely manner, so you in turn can pay your vendors in a timely manner. Again, this Insight page will give you a clear snapshot of exactly what is taking place with your business and where your money is coming and going. As I look and go around the screen real quick, just to highlight on some of these, I'm just going to read through them to make everyone comfortable. Place your customer over any colored area for a quick look at the numbers or click to see the detailed report. You can click here to add your company logo in the top left-hand corner. You can click the arrows to move between panes showing you on the profit and loss report that you're looking at. You can click on the icon gear to choose what shows up on this page and or customize out any additional information that you're looking for. You can track where your money is going and where you might need to trim expenses. And it instantly sees your open and overdue receivables. Now, that's the one that I was actually touching on a little earlier. That's a key highlight area that you're going to have to wrap your arms around, is the ability to be able to collect from your customers when it comes to payments. And making it a focal point of your weekly work each week is going to be a key aspect of keeping that positive cash flow scenario taking place with your business. The Insight tab does a great job of providing you that information very, very quickly. Using the reporting center. Okay, this is actually my favorite part of QuickBooks, to be honest with you. My prior world that I lived in, REC, large solar company, lots of people. A lot of my job was doing cash flow projection and analysis, and I spent a ton of time within the reporting center within QuickBooks, getting very familiar. The great part about it is it does really have a robust reporting center. Now, the customizable features are not as great as the desktop version. And if you are a small startup looking for an exit strategy in the next couple of years, I'm going to be doing some really fancy forecasting numbers, QuickBooks Online might not be the best reporting system for you, and I would highly recommend considering QuickBooks Desktop because it is a little bit more robust. With that said, if you're just going to use the reporting features for just general reporting things like AR, AP, cash flow, itemized, supplies and materials, figuring out where you're spending money with your vendors, the reporting system within QuickBooks is absolutely amazing. The reason I state that is virtually every report that you can possibly think of has already been generated by someone over the last 30 years. It's simply a matter of deciding what you are looking for, finding that report, and here's the key part. Not only can you find the report, and there's the example on the page is a profit and loss report, but once you find a report that meets the template or the look that you're looking for, you can customize that specific report towards your company, save it, and it will always be available to you when you go out. So whether you're doing projections for a CFO or you're presenting to a possible investor out there, this is where you're going to want to get really comfortable with the reporting features within QuickBooks Online. Again, I can't highlight enough that virtually every report possible has already been generated by someone else out there. The nice fact of the matter is that you are able to access any report that's ever been generated by QuickBooks and utilize that template, and then in turn customize that template towards your financial needs as it relates to your specific business. Again, take the time to get familiar with this particular page. It's key to the success of your business from a reporting perspective to have a clear understanding. And the amount of information that can be provided here is pretty incredible. You can track everything from your banking to inventory to preferences to supplies and materials to job categorizing. It really just depends on what you are looking to generate that report on, and more importantly, what you are looking to track against. I am going to pause for a sec here just to see if anyone does have any questions regarding the reporting center. We do sometimes get some. Nope. Okay. Oh. Lastly, but least, I will touch on this really briefly. We've already touched on the section here in regards to tax accruals on invoicing to customers. This would actually be where we would generate the reporting associated with doing our filings for the BOE, for state taxes, and for the IRS for federal taxes, all of which can be done directly within QuickBooks, and the reporting can be generated from this particular area here. Company snapshot. Another great report, very similar to the Insight in the homepage, slightly different in the information that's being provided. You can use the company snapshot to get real-time company information and perform tasks from a single pane. This is a snapshot of the money going in and out of your business over time. Use this section to compare the monthly income and expenses. One of the features one of the really great parts about the company snapshot is it really does give you an idea, just like on the Insight page, of what that cash flow scenario is looking like, how much money is going out on a weekly basis versus how much is coming in, and then projecting that out over a period of time so that you do have a clear understanding. Now, any successful business out there, as anybody knows, needs to have more money coming in than more money and less money going out. And as is identified by the picture that you're looking at in the top left-hand corner of this screen. You can also click here to learn how to customize the company snapshot. Much like the Insight page, you do have the ability to specifically customize it to exactly what you're looking for. But instead of graphs, you're going to have more specific line item details. So the next example on the top right-hand corner is see what your customers owe you. It actually show you the larger clients that you have outstanding invoices on and when they're due and the amount that it's due. Again, to help you manage the cash flow scenario within your own business. On the bottom left-hand corner, we have account balances, which include all bank accounts, receivable accounts, payable, credit card, assets, liabilities, and equity accounts. Again, giving you a high-level overview of exactly where your company is currently at. Lastly, but not leastly, on the lower right-hand corner, we're able to compare how much you have spent this year over the same period compared to last year. This is a really, really great one from a budget to actuals perspective and projections. Once again, QuickBooks does have the ability to track against a budget. Once again, having an understanding of where you are this year versus where you are next year will give you a good idea of what you need to do to be successful moving forward. Again, if you have a fixed budget within the system that you're actually able to track against, not only will it show you where you are this year versus where you were last year, but it will actually show you the budget versus actuals taking place within the system. Profit and loss, the report that tells the whole story, as the saying goes. Probably the most common report that's run in QuickBooks is this profit and loss report. And the reason for that is pretty simple. It provides you all relevant information as it relates to your company's financial standing at a set point in time. This report is also known as an income statement to other people out there. It summarizes your income and expenses for a particular period of time so that you can tell whether you're operating at a profit and loss. Traditionally, I would run the profit and loss on a monthly basis and provide it to the upper hierarchy to have a clear understanding of where we're at from a financial perspective. I'm not going to go into too many of the details related in here because we've actually literally touched on all of them as we've got to this point. But this report shows the total for each of the income and expense accounts in your chart of accounts. And we are going to get to the chart of accounts shortly. Double click on the subtotals to see the transactions that make up the amounts. Now, the nice part about this particular report is it's completely interactive. So as you see the subtotals for each line item, you actually have the ability to click on those subtotals and dig into either the transactions or the expenses that are hitting QuickBooks to make up that total. Again, spending some time to get familiar with this particular report is going to be key. If you're going to catch errors in the system that have been made, you're going to catch them in two places. One is when we reconcile against our bank account on a monthly basis, as we talked about a little earlier. The other area that you will see it clearly be identified is within this profit and loss. And if you work in the financial field in any way for a period of time, and you get familiar with this report, you will start to notice the patterns and trends that occur. And so when there is a delta or differential that takes place between two different accounts, it's going to be very easily identified between these two reports. Getting comfortable with the profit and loss report as it relates to your business is highly recommended moving forward so you have a clear understanding of what is taking place with your business. I keep reiterating that point about having a clear understanding because as businesses grow, they also get more complicated. And it's those complications that in turn hinder our ability to have a clear understanding of what is taking place with our business. Understand that if we are inputting the correct information in QuickBooks, we're reconciling on a monthly basis and doing our due diligence, we will always be accurate. We will always be on top of our financials. And that, if anything, is one of the key aspects of running a successful business. The other part is making it scalable so that as the business grows, we can repeat those actions. And then most importantly, training other individuals as the tasks fall out of your scope or purview as the business grows. You need to be able to take this information and relay it to someone else who may take on that task at times. Yeah, absolutely. Ooh, I get that a lot. So simplicity, it's cash, right? And so understand that, and I don't like to go down the tax rabbit hole too hard, but let's talk about this really quick because this does come up a lot. So tax versus accrual isn't something physical. It's a methodology, right? In the way that we recognize either cash hitting or expenses or a profit. If you are small, if you're new, I would highly recommend cash. The person that's going to dictate to you whether you should be cash or accrual is your CPA. And so he's going to have the best knowledge base to make that decision. Now, without actually looking at your financials, it would be hard for me to sit here and say one or the other. But for simplicity's sakes, and if you are within the first 2 years of starting up a business, start with cash. Keep it simple for now, unless you've been instructed otherwise.
And the difference is cash is money in the bank.
Correct.
Accrual is accounting into my accounts receivable is factored into that profit loss.
That is exactly correct. You're counting on stuff that either have not arrived or prospectively you're expecting to arrive at a later date. Yeah. And that's why I say from a cash basis, it just makes sense. I mean, everything we've talked about today is on a cash basis, from how we close the month out to how we track the expenses and they hit the account. Not to say that at a later date, you might not want to go to accrual. You certainly can. Just keep in mind that when we switch between cash and accrual, it is highly recommended we do that on an annual basis. You don't want to all of a sudden in July go, you know what, I'm going to switch from cash to accrual. Because it's not that simple. A method, again, you have to apply the methodology across everything that you do over that period of time.
Sure.
Does that answer your question?
Yes,
Awesome. Okay, well, with that said, now I'm actually going to take a step back and take us actually directly into QuickBooks so that we can spend some time looking at the chart of accounts, because I have promised you we are going to talk about chart of accounts. I just got bounced down. Guys got to ask me more questions, or this is going to go by way too fast.
Any reconciliation?
I don't go over reconciliations today, but I could certainly go over it with you afterwards. That's not a problem at all. Super, super easy. People hear that word and they get all shaky, and it's like I sit and spend like 10 minutes with them and like, oh my God, this is so easy. And I'm like, yeah, it really is. They just hear that word and they get all squiggly about that fact. So honestly, it's really easy. Share the screen. Got it. Okay, you should all be able to see my QuickBooks page now. This is actually a model I use when I'm teaching Cal Poly students. We run a summer accelerator at the CIE up in SLO. We have 8 accelerator teams that come in through the summer that we basically give $10,000 to, and they figure out if they've got a product and or a service that can go to market. And we teach them QuickBooks to operate and run that business out of. And the model that I use to teach them with is R&M engineering, because it's a construction company and it hits like every area that they could possibly imagine. And so for us today, and this is your QuickBooks Online, I'm actually going to show you the chart of accounts, which we talked about at the beginning of this. I'm going to click on the little search icon at the top. The 3 areas that I like to focus on today are the customer, the vendor, and the chart of accounts. And the most important one of those 3 by far is the chart of accounts. Why is the chart of accounts so important? Well, the chart of accounts actually tracks all the expenses and the line items that they are tracked against. And the nice thing about QuickBooks is it generates for you automatically a default set of chart of accounts for you. And it'll lay everything out in front of you that relates to your business currently. Now, there might be items in here that do not relate to your business per se. As an example, on my screen right now, we've got quite a few fixed assets. It relates to vehicles, software, office equipment. That might not relate to you right now, but that does not mean that a couple of years down the line, you're not buying a business car or renting a copier for the office. So do keep that in mind as we proceed through the chart of accounts. A couple of aspects that I like to touch on before I dig on it. This, much like everything else within QuickBooks, is completely customizable. There are certain rules that I have, though, that we want to apply against it. So as you notice on the right here, you actually can click on the View Register, and it will take you into a report that will show you all the undeposited funds. So as an example, I'm not going to have any because I haven't done any one in a while, but it took me directly into my deposited funds once I clicked on that specific line item. Why is that so important? Well, on the right-hand side here, we can actually click on it. We can edit this particular line item and we can hide it. And so one of the very first exercises I'd like to recommend that people do with their chart of accounts is to consolidate the chart of accounts. Why would we want to consolidate the chart of accounts, Damon? Well, really, when you look at the chart of accounts, you only want to see the chart of accounts that relate to your business right now. And I can assume and assure most of you out there that a number of these line items might not apply to you. So as an example, we have a design incorporated here for sales of products. That might be in your default setup of chart accounts, but it might not relate to your business. In those cases, let's simply go ahead and hide. I showed you before, we can go in here and make inactive, right? So I'm actually gonna make this one inactive. I'm gonna tell the system yes. Now we can go back and mark it so that the system does not have it inactive and we are able to see it. But the idea behind what I'm trying to express today is that to keep your chart of accounts really, really focused. And here's why. As you start to do the things that I've talked about, adding in items, adding customers, adding in vendors, your chart of accounts will start to grow out regarding the needs that you have to track specific expenses. One of the mistakes that people make when I'm teaching this class is they put everything in the kitchen sink into their chart of accounts. And I've come into businesses where they have, 300-400 line items within their chart of accounts, and they probably use 30. So what do they spend half their time doing when they're in the chart of accounts? Scrolling up and down, looking for a specific item. And then they invariably end up clicking on the wrong one, which means they didn't have to go back and correct it. So from a time management perspective, keep your chart of accounts really focused and narrow in regards to exactly what you need it for. With that said, get comfortable with your chart of accounts and what it relates to. So at a high level overview, we have all our current assets at the top. We have our fixed assets. We have our accounts payable. We have our liabilities. And then we have our income at the very bottom. Oops. Get back. Again, making sure this is really concise and focused and relates specifically to the business that you are dealing with and what is relevant to you is key. Now, my chart of accounts here for such a large business is really actually pretty small. I probably only have about 40 line items in here currently, and that's kind of where you want to be in that 30 to 40 mark, depending on the size of your business. Again, making sure that they are set up correctly, they are tracking correctly, is key to the success. Well, what do you mean tracking correctly, Damon? Well, simple little things, right? We talked about business expense and how vitally important it is to track those business expense because they're an offset to revenue for you at the end of the year. So tracking things like, oh, I see a bank service charge report right here. Well, your bank charges you a fee. Not everyone actually tracks and collects that fee. See if I can go back and pull last year. No? Again, these are the key areas in regards to being able to track the expenses on a line item basis regarding each and all transactions that take place. You might have a lease on a business related car that is hitting the system that you utilize to do deliveries, so on and so forth. That would be tracked as an expense as well. You would then be able to come in here and directly see how much, whatever expense you've incurred over that period of time for that specific line item. You can also track against multiple vehicles if that is the case, and set up an amortization schedule if necessary, if you're purchasing them, to write them off over a set period of time. Excuse me while I cough. Again, understand that you don't have to be an expert when it comes to chart of accounts. You're blessed in that you have access to SBDC and a number of great consultants to support you in that area. But you do want to be familiar with exactly what the chart of accounts does in regards to your business and how it interacts. And so part of today's exercise is to get you to understand the relationship between the customer, the vendors, and the chart of accounts itself. Because everything from a financial reporting aspect flows directly through the chart of accounts. So if you're, as an example, buying a product And what's a good example here to use? So I used to work for a winery as well before. And one of my many other jobs, in working at a winery, one of the real areas that we focused on was the cost basis. So what is cost basis? Let's say we're selling a product, let's say a bottle of wine, right? Well, most people just think it's the wine that gets poured in the bottle. Well, it's actually not. That's the cheapest part of producing the bottle of wine. You have the bottle, which let's say costs you $5. You have the label, let's say it costs you $1. You have the cork. You have the cover that goes over the cork. And then you have the little sealy thing that goes around it. Let's say all of those items put together cost you $18. Now, when we go out to purchase those things individually to bring them in and put them together, the system automatically knows, because I've entered what I paid for those specific goods right here, cost of goods, or in this case, it would be cost of goods related to the customer. The system automatically knows that my cost basis for that bottle of wine is $18. I then go and sell that bottle of wine to my customer for $50. The system automatically knows that my margin is $32. Now, I do that for every bottle, and the system then tells me, well, your most profitable bottle is this bottle, right? And so I go out and I do sales for 3 months, and then I sit down with the owner of the business, and he goes, well, tell me how we're doing. What's selling? What's hot right now? And we look at our sales, and we can tell exactly which bottles we're getting the best margin out. And he goes, well, let's do a promo on the one that has our biggest margin, right? Let's do a 10% coupon off and blast it all out on social media. It's these kind of methodologies that you can use to drive your business if you have the relevant information in regards to what it is actually costing your business. And it all starts with the chart of accounts and the ability to track those expenses at those line item details within the chart of accounts. Now, I'm just giving you some brief high-level examples right here because, once again, you have the ability to track at a specific line item basis. Now, the example that I'll use here when I'm talking about a specific line item is a lot of the teams that I work with over the summer are in the development stage. They're still actually figuring out if they actually have a business, a product, and or a service. So a lot of the time they spend on product development. So they would want to have a specific line item within the chart of accounts where product development, and they would understand exactly how much they're spending on product development in regards to marketing, promo, and all the other areas that they need to build a successful business to sell this product and or service that they're trying to provide. This is how the chart of accounts directly interacts with all the other areas in QuickBooks. And I really want you to start thinking about that from a business tracking perspective and what specific line items within your business you want to start tracking down. And this can relate to anything from car rentals, car expenses, overhead, sales, product development, you name it, you're able to track it. It's just understanding how that relates to the overall perspective within your business. Reimbursable expenses, and I'm just going through the general line items as an example within the system to show you what you can actually. So you have an employee that went out and did a transaction, but you need to reimburse them. Well, you want to have a clear understanding of what that looks like, how much that's being tracked against. There's a specific line item in here to track against it. As you can see on my screen, we also have sales as an income line item. So any sales going out is going to hit the sales line item. We'll be able to track against it. Credit card fees, any additional fees that are being charged to the business by utilizing an outside vendor. All of those would be captured within the chart of accounts at the line item detail. So at the end of the year, when we do our filing, we can maximize the write-offs against the business. And that's where this really leads us at the end of the day, is ensuring that we're capturing both the income side and the expense sides accurately so that we're maximizing the margins potential moving forward. And most importantly, not paying too much in taxes. Because at the end of the day, if you're not tracking your expenses correctly and accurately, that's exactly what you are doing. Before I go any deeper into the chart of accounts, it's a tough area to get into on our first session without going too far. I will tell you, I literally spend half of our intermediate session going over the chart of accounts, POs, and taxes, because they do integrate a lot more at that line item level. With that said, I'm going to pause for a moment to see if anyone has any questions regarding the chart of accounts within QuickBooks. No? Okay. Guys, you really got to ask me more questions here to put some pressure on me. I'm just saying, you know. Okay. Chart of accounts, high level. We've talked about customers. We've talked about vendors. I do want to just show you what the real side world of customers looks like. Since I was showing on my slides. Let's just jump in and take a look at once. Do I still have them in here? Yes, I do. Let's just take a look at BAC Electrical. So you can see I jumped into my customer side of things. These are my customers now that I'm currently looking at. And I want to go ahead and BAC Electrical Engineers, I'm going to go ahead and create an invoice for them. I'm just going to walk you through how simple this process can be. Right, so I clicked on create an invoice. The system automatically pops it up. Because I have done the due diligence of setting this customer up correctly, I have the customer's email already pre-filled in, as you can see at the top hand side of the screen right there. I can actually, you can see on the right in the middle of the screen, it actually highlights for the customer their ability to pay for us, I should say. You can utilize credit cards or a direct bank link. Once that is established, the system will remember that. That they can utilize any one of those payment methods to facilitate the payment directly through to you. It has the billing address. It has the terms, which we talked quite a little bit about. It has the invoice date being today, and then based on those net terms, it projects out when the due date is. And we've talked about the due date, how the system has the ability to track it. We simply come down here and we specify the date of the service. We specify the product and or service. So in this case, let's just say it was client meeting. Rate was 125 an hour. Class coding, we do not talk about in this session. I spend a lot of time in my advanced class going over class coding. If you don't know what it is, you probably don't want to ask me right now. It is a way to track specific expenses associated with either multiple location, specific projects. In my case, I used to use it a lot because I was working for a construction company. We were in 37 different states, working on 28 different projects, and we would want to know exactly where each one of those projects is. That's where you can use class coding to track them against at a specific line item. In your case, I'm guessing you don't have multiple locations, so class coding won't come into play. With that said, I do go over it in a further class. Fantastic. Let me just finish that up and we can take these questions. With that said, the system then automatically populates down to the subtotal area. When we set this customer up and these services, the system will automatically know we're providing a service here. This is a meeting, so there's no tangible products. There's no tax liability associated with it. If there was, and this was a product, the system would then calculate out the tax rate for SLO counting and project the accrual for you right here, which in turn we would then need to report on either monthly, quarterly, or annually, depending on the size of your business. Once that's done, it's simply a matter of scrolling to the bottom of the screen. Is it showing me? Oh, my bar's there. That's why. And then sending it out to our customer. Right down here, save and send. And the system will literally close this invoice and send it out to that customer at this email address that we referenced at the top here. Invoices are literally that easy to enter if it is set up correctly. Again, the customer is able to pay you right away. The moment they receive this invoice in the email, they're actually able to click on the link. It'll provide them the line number for either credit cards. If they set it up before, the information will be pre-populated. They're also able to set up the bank link between their bank and QuickBooks to pay you directly. And again, that payment is processed out at midnight when it is regarding a bank. With that said, let's take a look at some of these questions. I do inventory in the intermediate session, yeah, and I spend about 20 to 25 minutes on it. With that said, if she'd like to set up a one-on-one session with me so that I can go over it in a little bit more detail with her, I would not mind at all. She just needs to make sure she's an SBDC client.
Great.
And get her set up.
And then Lisa asked, what is the difference between inventory and inventory asset in chart accounts?
So inventory traditionally is a product that is on the shelf for a set period of time and then is moved out once we draw inventory down. So the inventory setup in QuickBooks is to help fulfillment, which is actually the people that fill the order. And why this is so important from an inventory perspective is if a lot of the time most larger vendors out there deal with the purchase order system, which I go over in my intermediate class, whereby the system will automatically tell you if you have enough of the product in stock to fill the request. And the inventory system within QuickBooks can automatically do that. So you get an email from a customer with a PO and it says, I want, and I'm going to use wine, just an easy one to start with. I want 40 cases of this particular wine. You enter that into the system. The system is then able to directly look at your inventory control and tell you, yes, we have 68 cases. We can fulfill the 40 order. The inventory asset is a little different. The asset can be anything from a car to a computer or anything else, but it's not treated like inventory per se. The reason it's referenced as inventory in there is somebody might be utilizing it for a period of time and it might not be available. It's not inventory in regards to what is being sold to the customer out there. And the reason for that is that has a number of different tax implications in how it was recorded and tracked. Again, if you'd like to go in a little bit more detail in regards to that, I would be more than willing to set up a one-on session and we can spend some time discussing what the benefits are to both sides. You very, very rarely see the inventory asset being utilized, to be quite honest with you. CPAs do not care for it very much as it makes it quite difficult for them from a cost basis perspective to track some of the items that, or some of the expenses that are associated with them. Trying really hard not to go too far down the rabbit hole as it relates to taxes.
We have another question from Michaela. She said, what would be the best class to learn more about class coding?
Ooh, that's going to be the intermediate and advanced. You know, when it comes to the class coding part of thing, if you have a specific need, again, I hate to say this, but it would serve you well to set up a one-on-one session. Because a lot of the time when it comes to class coding, it's all about the structure of your business and how it's set up and how that class coding would relate to the business and the structure that you have. So one of the things I would want to know about your business is how it's structured. What do you sell? Are you providing a service? Are you providing a product? And then I'm guessing that you have multiple locations that you're attempting to track against. How are they set up in QuickBooks? How is the inventory system controlled against those line items within QuickBooks so that I, in turn, could give you the right advice in regards to class coding. Sorry for the long-winded answer. Wow, okay. I hope I answered the asset inventory to your needs there. I'm not sure, what was the gentleman or person's name?
That was Lisa.
Okay, let me know if you have any follow-ups in regards to that. And again, can certainly take it offline at the end of this session there. Okay, so we've seen how simple it is to create an invoice. We've seen how simple it is to send it out. Let's take one last area I wanted to look at while we're in here. And then I'm just going to open up to general questions, is the vendor side. And just a reminder, I will be sending out the guide in regards to QuickBooks. Hopefully I have everyone's email address. At the end of the session, I will be sending out a copy of the guide and everything that we went through today, which will actually include the intermediate and the advanced classes. So you will actually be able to read up on a lot of the questions that you've already asked me about, i.e. class coding. I just recommend that you don't dive into it without talking to someone first and how it may relate to your business. So vendors, much like customers on the other side, taking the time to make sure that you are setting these up correctly, that they are entered correctly with the relevant information behind them, make your life that much easier when it comes to actually creating the bill and paying them out. Let's just take a look at ASAP reprographic here. We're going to just create a quick bill and I'm going to show you how easy it is. Again, once these line items are all set up correctly, we have ASAP right here listed as the vendor at the top. They have net 30 terms, good for them. Due date on this is 5/27. We could add a specific tag here if we chose to, relating to the specific expense and exactly what it was for. We can come down to the category coding and say that this was how about this was a consultant meeting to go over an expense. We met to discuss build out. Amounts $500. There's no markup. Customer's already specified. We're not using a class coding right now. Save and schedule a payment. Oh, of course it is. I haven't renewed mine. So at this point in time, we literally have a bill that's been created for $500 for our interaction with this customer. We met with them for a period of time regarding a build out. It's consulting a lot that's being charged to this. We're charging them $500. There's no markup on this. The billable, this question often comes up. If we can build out specific projects within QuickBooks that we're working on, and I would then be able to charge this directly to that project. This is where we start to get into things like milestone billing and progressive billing. I don't know if anyone's familiar with those terms, but we would accrue all these expenses over a monthly period, and at the end of the month, send the customer one consolidated invoice showing them all the expenses that had incurred over that period of time, as opposed to milestone billing, which is where we hit a certain mark in a negotiated contract, which we in turn would then go and invoice the client for. Those are the only two differences in those two regards. With that said, that is all I have for our beginner's session today. I would like to open it up to any questions regarding anything right now that anyone would like to discuss in regards to either what I've shown you or any perspective questions and or thoughts that arose. The other part about this that I'd like to just touch on really briefly is you will get we still send out the multiple choice at the end of this to give the review and the feedback?
Yes, we will have a follow-up survey.
Okay, so there will be a follow-up survey that will be going out after this session. I really would appreciate if you took the time to give me some feedback in regards to this session as a whole. I've been doing this for a while, but the only way I can improve on what I'm doing, whether it be the interaction or the slide deck, is that if you give me some feedback on either what you'd like to see, what you didn't like to see, what you'd like to see more of. I try to make this as interactive as possible, as opposed to just sitting and seeing me move my mouse around QuickBooks. I don't always find it to be the most beneficial, which is why I use the slide deck and take the time to actually walk you through it before I jump to QuickBooks. With that said, your feedback is vital for these programs and for me to improve on what I'm doing. So any feedback that you can provide is greatly appreciated. With that said, it looks like we have something in the chat here. How can I make it so QuickBooks doesn't sync so far, i.e. I only want to sync from, but don't want to be able to categorize it? Yeah, great question. So the good news is when you actually go in to set up the bank feed, linking to the bank, to pull those in transactions that you're talking about, you can specify exactly how far back you want to go and what transactions you want the system to pull in. It is dictated by date. So the system will actually ask you, when you set it back, how far back do you want us to go and pull those transactions? That's where you have the opportunity to specify the period of time that you want those transactions to be pulled in for. Hopefully that answers your question in that regard. Please follow up if you have any follow-ups in that regard. Any way to change it if I've already did it and cut? Ooh. So there is, so the only method that I know currently is for you to remove the bank feed and add it back in. The only issue with removing the bank feed is that actually should solve it for you because it will not delete any transactions. All it will do, so the offset to what you're saying is how would we remove the transactions that you've already categorized would actually be the bigger issue. Because we could remove the bank feed, which in turn would stop the system pulling them over. Then we could reactivate the bank feed and tell it to go back to a certain period in time, a week ago only. But the issue at hand then is all the transactions that it's pulled in prior to that, yet you've deleted. Do I need to delete and redo? I would not want to answer that question without doing some due diligence, because that's a lot of work for you to delete and completely redo. So first of all, you definitely can remove the bank feed, add it back on, and then specify the period. And that would not be a problem. But then removing the expenses that have already hit and been categorized would be the exercise that you would have to go through. So yes, unfortunately, you would have to delete and redo. Hopefully, you're not talking about a large period of time here. I mean, you've referenced 1/1 of 22 and 1/1 of 23. Oh, I see what you're saying. From 1/1, yeah. Yeah, you absolutely could do that. So if you went into the bank feed, removed the bank feed, then went into your expense line items and deleted everything out, and then went back in, added the bank feed in as of 1/1/23, it would pull those transactions over, which would then enable you to categorize them for that period of time. Hopefully that answers your question. If it doesn't, let me know, and I will gladly sit down and do a Zoom meeting with you and take a look at it, and we can go over it together. Again, guys, but part of what today's exercise is to give you a clear oversight of what QuickBooks can do at the most simple and basic level. While I do work for Cal Poly, I actually am a consultant as well for the SBDC, and I meet half a dozen people every week going over all these questions. And so that's why I say, let's set up an appointment, let's do a Zoom meeting, let me take a closer look at what you're saying. The last thing in the world I want to do is go through this exercise and then create more work for you. Cal Poly, yeah, please sign up, guys. Great program, great resources. I can't say enough about the great job that they do as a whole. Really, really can't. Hopefully that answers your question in regards to the bank feeds. I think it's DSO. Let me know. I'd gladly see if we can set up a meeting so I can take a closer look for you and see what the best options are. Yes, thanks. Great. Yeah. And again, I'll send out the guide after this session today. And if anyone wants to respond and set up a meeting with me, again, I'm more than willing to sit down with anyone and help them out in that regard, just to get a better idea of what your business looks like and where I can help you moving forward. Keep the questions coming, guys. Please.
Bookkeeping essentials. You mentioned, and you may have covered this, but to distill it succinctly, what are the monthly things that we're doing for just doing your own bookkeeping?
So number one is going to be reconciling your books. Okay. Number two is doing your banking on a weekly basis. Okay. Number three is
your banking
the deposits. Yeah. And you want to pick a specific day, because actually I'm going to show you the reconcile right now, because I did say I would show you that, so that it makes it easier, because then you're only looking at 4 balances that tie out to that balance as the bank, as opposed to 25 different transactions. So reconciliation by far is the most important. Banking is the second one. And the reason banking is so important is it directly affects the balance. QuickBooks should always tie it out to the bank account, but the only way for that to take place is as those transactions come in, we're making sure that we're posting them to the correct category account and or invoice to wash them out. Thirdly is invoicing, the ability for you to bill your customers within the month that you're doing the work. The reason for this is really, really specific. For you to recognize that revenue, you need to bill within the month that the work is done. One of the areas that businesses get into trouble is they wait until the following month or the month after that to be doing their billing. That impacts the ability to collect, number one. That impacts our cash flow, number two. And it means that we're not correctly tracking when those expenses hit, because you're incurring those expenses either that month or the prior month for the work that is being done. And so if you're invoicing your customer 2 months later, that's 2 months that you're losing from a cash flow scenario. So those are the 3 by far most important things. Here's the good thing. If you're doing those 3 things, you'll always tie out. You will always tie out. And so making sure, and again, in the guide, I actually have a section at the end that goes over the month-end closeouts, which is really what you're asking me about. And that's one of the things that we go over in the next session, and what that means. And just to give everyone else a high-level overview out there, once we do the reconciliation, which actually I'm going to walk through right now, once we're done with this question, just to show everyone how simple it is, because it's the one exercise that I can't recommend enough that people do, is that once you've done the reconciliation for a period, we actually have the ability to lock that period out in QuickBooks. Meaning, here's what happens a lot of the time, right? We'll do the reconciliation for the prior month, and then lo and behold, we've got a vendor that sends in a bill late, right? And you get the bill, and it's for last month, and you go, oh yeah, let's plug that bill right in. Bill right in, it was last month, enter. That's great. What happens when we get to the end of this month and we try to reconcile? You're going to be off. You're never going to balance out. Do you want to know why? Because you took a bill that you got late and you pushed it back into a period we had already closed. So even though the bill says last month, we should actually be entering it in this month because that's when we received it from the vendor. Locking it out so that that takes place and utilizing the month-end closeout, which involves everything I've just talked about, plus the reconciliation, is what is going to keep you on track financially. And most importantly, manage that cash flow and tie you back to the bank account. So I actually do have a checklist. It's on the second to last page of the guide that I'll send you out. That actually breaks out the month-end procedures that you need to do from that time. But honestly, it's really going to come down to those three things as a whole. Okay, let's reconcile. Okay, so type to reconcile. This is it. Very, very intimidating screen, right? So my beginning balance at my bank account was $8,957. The system wants to know what my ending balance is. I'm going to jump over onto my bank account, log into my mobile banking. I'm looking at my statement for the end of last month, and I'm going to punch in an ending balance of $12,500. And we're going to say the ending date was and then we're going to come down here and we're going to click on Start Reconciling. Now, this probably won't generate a report for me because there's nothing for it to actually bounce back to because I actually don't have the bank account linked up. But what it will do, and let's see if I can actually show you. Give you an example here. It's not going to share this. So I don't actually have an example, but long story short, what it will show is a list of all the transactions that bring me to that $12,500 balance. And what it's going to do is a transaction that is not included, it's going to highlight for you. And all that's telling you is either that transaction was not coded correctly or it wasn't coded at all. And as you start going through, it's going to total up to that 12,500. And so literally you're going to sit there and go through each line and go, oh yeah, what was that? That was a $3 charge for the credit card. Oh, I didn't capture that. Okay, so click on credit card, click on the transaction. It's an expense, credit card fee, boom, it'll add on. And it repeats that process. And I will tell you a lot of the time, especially if you're receiving payments in that, it tends to be these credit card fees because a lot of people pay with Venmo and whatever, and you don't always see the fee. What it ends up, you send out a $90 bill and you get an $87 payment coming in. And you go into your invoice and you pay, that you mark it as paid, and what's the system going to tell you? Where's the $3? And you're like, well, where's that $3? Oh, wait a minute now. That $3 is actually an expense to the business. So we have to create the line item and charge it as an expense. And it's these little things that tend to show up in the reconciliation. It's not the large items, just to be clear. It tends to be these small little items that are out there. Wish it would let me go in and show you guys because it's super easy. I will definitely have one for my next class to show you. It's just I don't have the bank feed still set up. But again, if I could have one recommendation here for anybody that's worked in QuickBooks or is working in QuickBooks, please do this exercise. I mean, like, if there is one thing that you do on a monthly basis that ties you back to your bank account, it's to reconcile your bank account. It is the best way to stay on top of things. You're going to catch any errors within the system. Take the time to do it. Along with the banking side of things that we've talked about, it will enable you to stay clearly on top. Your QuickBooks will always tie back to your bank accounts, and it will find the discrepancies between this and the income statement. You're going to find any discrepancies or any items that you might have missed out there from a category coding perspective. Sorry, I couldn't share more with the consolidation if it would show me more. Let's see if I can try one more time. You guys an example. Ah, fantastic. Got an example I can show you guys.
So, for example, if I have a bank balance discrepancy with in QuickBooks balance, we could reconcile. That means I have a little bit of searching what not to do to reconcile that one.
Correct. Okay. Correct. And you're going to know right away, because here's what's going to happen. This is, if you remember, you're going to hear me say this in my intermediate class if you come to it a lot. We have to have one source of truth, one place that we go to that is always right. And it's not QuickBooks. What is our one source of truth? The bank. The bank is not wrong. Unless the bank messes up, which doesn't happen that often, the bank is right. So here's what you're going to find. You're going to either have too much money in QuickBooks or not enough money in QuickBooks. And all you got to do is look at your bank statement and go through those line items, because one of those line items is missing in QuickBooks somewhere. And so if you look at the screen that I'm actually sharing right now, this is what comes up when you touch it.
Mm-hmm.
There we go.
So if I have too much in QuickBooks, that means somewhere there's like a double entry.
That's exactly right.
So I just go.
That's you nail on the head. And that's how simplistic it is, though. If you say, and that's why I mentioned the month-to-month scenario. So here's exactly what it looks like when we come into reconcile, right? It gives you the statement ending balance here. It gives you the clear balance. It gives you the beginning balance. It gives you how many payments you received. So in this case, we had 98 payments for $1,223.10. We had 3 deposits for $1,633. And then you'll notice on the right-hand side, these check marks against each of the line items. That's the system telling you, yep, you're good. We see it. We're matched. We're good. But right there in the middle, there's a payroll transfer. And you can see that that is not accounted for at some point in the line. And so it looks like they actually went in and made the entry. And what happens then is that difference on the top right-hand corner, see how your 0 zeros? When you go in and do it, that's going to show the delta right there. And it's either going to be a positive or it's going to be a negative. And you're going to know where to go look based on that alone. And then as you go through these line items and scroll through them, you'll be able to tell which ones you need to recategorize or recode. And it's literally that easy, you know. And so this is exactly why I talked about doing it on a month-to-month basis and not coming to me 6 months later and going, oh my gosh, it's a $27,000 differential. And I'm like, 6 months we've got to dig through to figure out, because that's 8 hours of work to do that. Where doing this right now, at the most, it's maybe 25 minutes if I've got to start digging through and figuring that out. But just that simple process of doing this on a monthly basis will always ensure you tie out. And it will get you into the routine of good habits when it comes to closing out the finances on a monthly basis as well. Any other questions out there before we sign off regarding anything, to be quite honest? And hopefully everyone found plenty of value in what we did today, and we'll be returning for my intermediate class as well.